If you ever wonder about what actually goes into a credit card approval or credit limit increase, this video is for you. I recently stumbled upon a thread in Reddit, specifically in our credit cards, where a former credit analyst for a major credit card company shares some insights on how underwriting works on the credit card side. I will link this thread down below so you can check it out for yourself. All of the questions and answers mentioned here are going to be from this thread, but I'm also share some of my opinions and strategies since I have been in the credit game for quite some time now and have spoken to several relationship managers at these banking institutions. So what can you expect from this video? It's going to be very much a Q&A style with my input towards the end. So let's dive right into it. So the first question is how to know if the income I gave is accurate. The original poster mentioned that they don't know for sure. Stated income is often exaggerated. However, your credit report can suggest whether your stated income is believable, and this might influence our underwriting decision. For instance, if you claim to make $250,000 per year, but recently took out a small auto loan for like $14,000 over a 7-year term, this may raise some red flags. Our underwriting notes on your file might say something like 250K year income versus 14K 7-year auto loan. Decline. While we never write applicant is lying, anyone that is at the bank reading this note will understand the implication. Other negative information on your credit report, such as late payments, persistent high credit card balances, could also make us question a high stated income. Interestingly, income rarely determines whether an application will be approved. It's more often used to determine the credit limit. So for my take, I think this makes sense. It's very similar to when I help clients apply for business credit cards. Many people aren't really sure about how much income to report. So for a business, you can include what you expect to make. So if you think you make $30, $90, or even $500,000 a year, go ahead and put that down if you can justify it with some logic. However, whether it is for business or personal use, saying that you earn over a certain amount, like $300,000, can raise some flags. This is because the average person in the US makes around $60,000 to $70,000 a year. So if you're earning a lot more and nothing in your credit history shows why that makes sense, they need to review it more. This doesn't mean that you can't be someone who saves a lot and doesn't spend much. It just means that it is harder for them to figure out how well you can handle your credit based on your credit score alone. Getting your income right is important for setting your credit limit. What can I say to improve my odds of getting a credit limit increase? When we ask why you are seeking a higher credit line, don't say anything that suggests financial stress. For example, I need to pay the electricity bill. I need to buy new tires for my car. I need a cash advance. This means avoid giving a sob story. Instead, talk about life events. These are moments when financially secure people need more spending power. For instance, my daughter is getting married, we're prepping to sell our house, my wife is expecting. For me, I completely agree with this. Something else to consider is that when you apply for a new credit card, you usually get a higher credit limit compared to just asking for a limit increase on that existing card. The thing is that some credit card companies will check your credit thoroughly, whether you're applying for a new card or just want to increase your limit. Since they're going to have to check your credit anyways, you might as well apply for a new card. This way, you'll get a higher limit and also get a chance to earn a welcome bonus or a sign-up offer if it is available. If you are worried about hard inquiries on your credit report and you're not sure, you can always put a security freeze on your credit reports. This lets you control who sees your credit information. It also helps find out which credit bureau the card issuer uses and whether they will check your credit. Next question is, if my application gets denied, how long should I wait to reapply? We are strictly forbidden to quote a time frame so as not to imply a promise. Furthermore, our lending standards can change. Our canned responses is, the longer you show a good credit history, the likelier you'll see an approval. But if I were to advise you off the record, I'll say 12 months. During this duration, make sure that you're not late on any trade lines and pay them down as much as you can. If you reapply sooner, frequent hard inquiries will hurt your chances. So here's my take. I totally agree what he says, but I think this is a bit stricter than what actually happens when you apply for credit cards. He mentions that hard inquiries impact your credit score for 12 months. That's true. After a year, they really don't matter as much. However, if you have 4 or more hard inquiries, this marks you as high risk, but you can still get approved for credit cards if you have 3 or fewer inquiries. And naturally, having no inquiries gives you the best chances of approval because you can reapply sooner if needed. Also, whenever you apply for a credit card and get denied, you will receive a letter or an email explaining why you were turned down. Often, these reasons might be having too many new accounts, too many recent hard inquiries, or just low credit usage. You can use this feedback and better prepare you for the next credit application. Next question is, what percentage of applications are decided by an algorithm and what are done manually? Around 80% of applications are decided by software. I personally find this to be true of my own applications and when helping others apply for credit cards too. I noticed that manual reviews on applications happens more on smaller banks or credit unions, especially when when it comes to business credit cards. For popular consumer credit cards like the American Express Gold or Chase Sapphire Preferred, approvals tend to be quicker. Usually you get an instant notification telling you whether or not you've been approved or not. Now the next question is, for applications that are reviewed manually, how subjective is the underwriting? 75% of the time, when we underwrite manually, the decision is clear and there's almost no subjectivity. For the rest, there could be some subjectivity. I said maybe around 5% are truly on the fence applications. So if 80% of applications are decided by software and 75% of manual underwriting isn't subjective, that leaves about 5% of all applications that involve real subjectivity. By the way, a manual review doesn't mean an application falls into the gray area. For example, if you have a strong credit report, you should be instantly approved. But if you're also asking for a balance transfer at origination, you might opt out for a manual review to see if we can approve that credit limit that accommodates the transfer. Another one of many reasons for a manual review is that your credit report is awesome, but you stated an unusually low income, which means that we can only approve you for a low credit limit. We might probe you for additional income. So to add on that, if you weren't approved for a credit card right away, you can always ask for a manual review by calling the reconsideration hotline, which many major lenders offer. But before you call, you should prepare for a strong argument of why you should have been approved. There might have been a misunderstanding about your income or how much you plan to spend on the card each month. Sometimes explaining your situation can correct errors made by automatic approval systems, and this could actually help reverse the decision. However, be cautious because this approach can backfire if you don't have a solid case. If your application seems questionable, the people reviewing it usually can tell if the information doesn't add up. So it is important to be honest and detailed in your explanations. What FICO scores are you looking for? We are not a FICO lender and we do not go by their scores. FICO factors in things that we don't care about. For example, when we're looking at your credit report, we're not allowed to consider medical collections and utility collections. We feel like these type of derogatory information, which lowers your FICO, are unreliable. So this part was actually quite interesting to me. After reviewing this thread, some people thought that the person who shared this information used to work at Chase. However, Chase typically checks credit reports from Experian, and depending on where you live, they may also look at Equifax or TransUnion. And they usually use the FICO credit score, which takes into account medical collections or utility collections. So it's possible that this person might have worked at Synchrony or Barclays, but it's really hard to say for sure since there's really no specific mention of where this credit analyst worked. So think about it this way. If you have a strong FICO score, your application is usually processed automatically. But even if it ends with an underwriter and they really dig into it, even then, there are factors in your application that could lead them to reconsider the denial. What debt to income ratio are you looking for? We don't use a mathematical formula. Like I mentioned earlier, income is rarely used in deciding whether to approve. It's used mostly to determine the credit limit. If we can never know the applicant's income, it seems pointless to look at any debt-to-income ratios. Now, that's definitely true. It is rare for lenders to ask for proof of income, especially when it comes to credit cards. For larger loans like secured loans, they often require more documentation, particularly given in the current economic climate. However, for credit cards, I've never had to provide pay stubs or even go into detailed proof of how much money that I earn. Lenders, they might make an educated guess about your income based on what's in your credit report. For example, if you have a mortgage, a car loan, and a student loan, they can kind of piece together an idea of your debt level. But this doesn't really tell them exactly how much you're making. Next question, I need details. Can you give me specifics on how you assess someone's credit report in making a decision? The guy responds, there's so much, it's impossible for me to give you specifics. After working there for a few months, the credit analyst will develop a sixth sense of how the bank wants us to lend. Our decisions are randomly reviewed by managers when our job performance is evaluated. Based on those reviews, we become increasingly calibrated and develop that sixth sense. The only thing I'll say is, we're trained to weigh the positives and negatives of your credit report and determine which side is more compelling. The positives are on-time payments, payments in full, long trade lines, high usage of the card, few hard inquiries, paid off mortgages and auto loans, no bankruptcies, and no charge-offs. The negatives are the opposite. There's really no big secrets or surprises here. That makes total sense to me. Your credit report is much more important than just your credit score. A thin credit profile can really limit your chances of getting approved. Essentially, everything that this person has explained about what goes into your credit report and how your credit score is calculated is crucial. There's no negatives to actually using the card, and the best way to show that you're actually using it is maintaining a little bit of a balance, which demonstrates utilization when it is reported. Of course, keeping a high balance can negatively impact your credit score, but showing usage like having 50% usage one month and then paying it off, then maybe 20 to 30% the next month and paying that off really shows that you're actively using the card and also responsibly paying it off. High usage in a specific month might lower your score due to increased utilization, but it also tells the lender that you are actively using your card. At the end of the day, many lenders want you to use their card as the main credit card so they can earn more money from transaction fees and interest if you don't pay the full statement balance. Is there a racial or gender discrimination in your underwriting? Absolutely not. We don't even know the information, nor will we ever ask. However, there is age discrimination. When we encounter a credit report with few activity, age can be a deciding factor. For example, a young adult, we can understand if there's little credit history, but if you're in your mid-50s and have little credit history, then it would suggest a bankruptcy. This answer really caught my interest because I know that credit card applications don't ask about race. They may guess your ethnic background from your address, but that's not reliable. Even your name might hint at it, but it's still just a guess. However, the point about age discrimination is particularly interesting. If someone over the age of 50 has a thin credit profile, lenders might assume that they've had a bankruptcy or simply follow Dave Ramsey's advice against using credit cards. This makes sense because negative marks stay on your credit report for 7 years and bankruptcies can stay up for 10 years. But here's the thing. If you have closed positive accounts, they can still appear on your credit report for up to 10 years. So if you're in your 50s and have no active credit history, it might look like either you avoided credit in your 20s to 40s, or if you had a bankruptcy and couldn't get any new cards after that. Although there are lenders who approve people with past bankruptcies, but there are few and far in between. If I ask for a credit limit increase, can you do a soft pull on my credit report? No. Our credit department doesn't even have a way to do a soft pull. So this is why I always recommend not requesting a limit increase over the phone. If you were to do it through a mobile app or online, the process is usually automated. Some lenders are known for not performing hard inquiries when you request for a credit limit increase, but it's never a sure thing. So just make sure which lenders typically don't do a hard inquiry before you go ahead and ask for that increase. How often do you guys give automatic credit line increases? There's no timetable. Using the card actively and paying in full is the likeliest way of getting one. Credit line increases may also be given based on the company's financial condition or on the country's macroeconomic situation. This makes perfect sense. Take Navy Federal as an example. They used to approve much higher credit limit increases than they do now. I believe the current maximum increase is around $8,000, but it used to be much more than that. The economy plays a big role in how much they're willing to offer too. Right now, the economic situation isn't that great. Consumer debt is increasing and more people are defaulting on loans and credit cards. So from a lender's perspective, they need to be more cautious than they were back when the economy was booming. Additionally, updating your personal information can also help your case. When you update your income details, it increases the likelihood of getting approved for a higher credit limit, especially if you're actively using your card and paying it down consistently. You lowered my credit limit or canceled my account because I defaulted on another company's credit card. Is that legal? Yes, this is what we would call a universal default. If you manage a credit card account poorly elsewhere, we might question if we can't continue our relationship with you. Bear in mind, when we open your account, it's based on your creditworthiness at the time. If your worthiness decreases significantly, that means that you risk no longer qualifying for our card in the first place. So it's important to remember that these lenders, they regularly check your credit. They usually do this through a soft pull on a monthly basis, which feeds data into their algorithms. This helps them assess whether you're becoming riskier than other borrowers. So if you're accumulating a lot of credit card debt with different lenders, they might assume that they may be the next one in line for default. If I'm on the phone and don't like your credit decision, would escalating to a manager make a difference? Probably not. Like I mentioned earlier, the amount of subjectivity in the underwriting process is low, but it doesn't hurt to escalate if you have time. If you're on the phone with us and you escalate, we'll tell you that the manager is unavailable and you'll be placed in a log for a manager to call back. That's a lie. There's almost certainly one there, and that the manager can take the call immediately if she or he wanted to. But we usually use a call log to deter you from escalating. Still, we will absolutely call you back. I find his answer a bit funny, almost kind of like a stall tactic. It reminds me of the meme where someone says, "Can I speak to your manager?" And the response is, "I am the manager." But seriously, underwriters are well trained. So if you get denied once and try again, there's usually already a record and a reason logged into your denial. Unless you have a really compelling story or new information that justifies why your application should be reconsidered, the chances of getting it overturned after a manual review or going through the reconsideration hotline are slim. Will putting my son as an authorized user on my card boost his chances of getting an account with you? No, there's lots of credit counseling advice that says listing your young son as an authorized user will help him establish credit. Since I don't work for FICO, I don't know if this improves his FICO score. But like I mentioned earlier, we don't lend based on FICO scores. Let's just say that person A has an account but puts person B as an authorized user. This doesn't make it likelier for person B to get his own account with us. Person B has no legal responsibility for paying person A's account, and therefore we don't deem that information relevant. I get that lenders don't rely solely on credit scores, they do look at your whole credit profile. From my own experience and working with others, I've seen having authorized user accounts, especially older ones in good standing, can really help you with credit card applications. I find these work way better when their approvals are automated because underwriters can actually see through this. However, for other types of lending like loans, they don't have that much of an impact because lenders prefer to assess how the actual borrower manages their debt. I've had late payments and cannot pay down my balances. How can I game the system and still get approved? I don't see a way to do it. The vast majority of the time, the credit report is only a tool used to make the decision, and most of it is done by software. I will contact your lenders to see if they can remove some of your lates. I'd also ask family members for a loan to pay down some of the balances. Lastly, check if there's anything on your credit report that can't be disputed. So I completely agree, late payments do the most damage to your credit report, and they have the biggest impact in the first 4 years. However, after that period, your chances of getting approved for a new credit card improve as long as you keep your payment history clean. But remember, those initial years and months after a late payment can make it very difficult to get approved for another credit card. You decreased my credit limit and you screwed up my FICO. Can you reverse that decision? Unfortunately, we cannot. Credit card accounts are an unsecured loan and the bank has full discretion on the amount to lend or whether to lend at all. So I agree. The reason someone might be upset is that if they are carrying a balance on their credit card. Let's just say that you have a credit card with a $10,000 limit and you're carrying a balance of $3,000. That's a 30% utilization rate, which isn't terrible, but it's not ideal either. Now, if the lender reduces your credit limit to $5,000, your utilization suddenly jumps to 60%. This would significantly drop your credit score. The best way to handle this situation are by paying down your debt or possibly considering opening another credit card to distribute the balance. However, it's important to remember that credit scores take into account both your total amount of debt and how much debt that you carry on each individual credit card. If I have a bunch of unused credit cards, do you prefer to see them closed? From an underwriting standpoint, there's no reason to close unused credit cards, especially if you had them open for a long time. We like to see accounts with long tenure. There is a risk that the bank can close the account due to non-usage. So it might be worth using the unused card from time to time. I completely agree with this. If your credit card application is denied and you call the reconsideration line for a manual review, the person might ask why you want another card if you have unused ones. This question is often used to see why you're applying for more credit when you're not using what you already have. It's good to have a response prepared. I usually say something on the lines like, it is easier to manage my finances, or there's a specific spending category coming up that makes the new card beneficial to me. On the other hand, it's better not to say that you're just getting it for the sign-up bonus, even if it is true, because that'll make it seem like you're just chasing the bonus, which isn't viewed favorably. I also recommend using each of your credit cards every 6 months to a year and just keep them active to prevent them from automatically being closed. So I actually have had cards closed in the past and it has negatively affected my credit score, so that's something to keep in mind. I love to open a credit card account just for the opening benefits. Then I close them. Does this hurt the chances that you approve me in the future? We call this card churning. This isn't a good idea because you're going to be racking up hard inquiries on your credit report. Like I mentioned earlier, we also prefer to see accounts with long tenure. I'm really not surprised by this because lenders and banks are in the business of making money. The sign-up bonus is a big draw to attract new customers, but once they have you, they want you to use that card and carry balances so they can profit from you. If you appear to be someone who frequently opens and closes credit cards, banks might hesitate to approve you for another one because it's going to be harder for them to actually make money. Regarding hard inquiries, I recommend applying for a new credit card every 3 to 6 months to space them out and to avoid looking too risky. Not every lender does a hard inquiry every time that you apply for a card, but having too many new accounts in a short period of time can make it seem like you're just chasing the bonus. How can you see my bankruptcy since it's been over 7 years? You aren't allowed to consider it because it should have dropped off. For some reason, old bankruptcies can still appear on your credit report. You'll need to take it up with the credit bureaus. Even if a bankruptcy is over 7 years, if we see it, we'll consider it. So an impact of a bankruptcy on your credit report usually depends on the type of bankruptcy filed. If it is a Chapter 7 bankruptcy, then it will stay on your credit report for 10 years. If it is a Chapter 13, it will remain for 7 years. So it's important to know which type that you have so you can address any inaccuracies with the credit bureaus effectively. If there is a mistake and it shouldn't be on your credit report, having it removed will significantly improve your chances of getting approved for a new credit card. If you are interested in credit repair and prefer a DIY approach to save some money compared to hiring an agency, I recommend checking out my DIY software, Credit Rehab Pro. You can find the link down in the description below if you want to learn more. What if your analyst doesn't like me personally and decline my application? As mentioned earlier, very few of our decisions contain any real subjectivity and majority are done by the software. But in rare cases where it is a manual process and your credit history falls in a gray zone, it's surely possible that the analyst who got offended might decline you. That's why I suggest treating your call as if you were applying for a job and just be professional as possible. Sorry, there's really no way to remove the human element. Our work performance is evaluated by the company based on 3 criteria: how fast we work on an application, how politely we speak on the phone, and how accurately we make underwriting decisions. Because calls are randomly pulled for evaluation, it's unlikely the analyst will be rude just to spite you. I couldn't agree more. Just be polite. There's really no need to be rude if your application gets denied. Even if the system has its reason for denying you, remember that these analysts hold the key in whether or not your application will be considered. So why be rude to someone who might have the power to help you? How do you view banking relationships? Like, as in, what should someone do with a banking relationship to make a positive one? Is it frequent transactions? Is it leaving a bunch of money in an account? Or etc.? If you're talking about creating a strong banking relationship with your checkings, savings, and investment accounts, I'll have to refer you to those divisions. I'm only familiar with underwriting for personal credit cards. So to add, this person also said that whenever they do a manual review on a credit card application, they never pull up someone's investment or checkings account, even if it is held by another division. I believe this to be accurate because often lenders and credit unions use an internal scoring system that automatically factors into their decisions. So a manual underwriter may not even see the need to reconsider your application based on that alone. They are just examining your credit profile and spending habits to determine if you could be a profitable client. Since these are just some of the insider secrets in case your application goes under a manual review, but if your credit score is not above 700, this won't help you with your credit card application. So watch these videos over here where I'll show you how you can improve your credit score so you have the best chances of getting approved for your next credit card.